All right, Stephen Vincent. It's May 8th, 2011. This is a BullBear market report for BullBear traders and members. And we're looking at the S&P 500 E-mini contract here on a 30-minute bar chart. And right up here we have the Bin Laden is dead spike. And I knew right away that there would be a reversal off of that, and wrote that in my report that in fact we did get that. And I wrote that we would possibly come down and retest the February highs and the breakout, and we did. We got a little bit below that and then reversed pretty sharply back above that level. The jobs report, of course, helped to propel us above the downtrend, and then we came on, sold off on Friday afternoon to retest the break here. And now here we are seeing some bullishness in the E-mini futures, about 0.5% up in early Asian trade, seeing some weakness in the dollar, a little bit of strength in commodities. And as I speak, we've got a lot of the Asian markets coming online, about 0.5% up pretty well across the board. So here is the most bullish interpretation of the current market setup. We've got a 3 of 3 high here in February, a 4 of a 3 low in mid-March, and now we're 1, 2, and into the third wave of the fifth wave with a 1 and a 2. So that would put us in a third of a third of a fifth of the third right here, which could potentially be a pretty powerful place. But there are a number of bearish setups and bearish scenarios and possibilities that I really want us to be aware of, and keep on our agenda, keep our eyes on, so that we're not caught off guard. It's really important for us to remember that we are in a fifth wave here, and fifth waves are ending waves, and you don't always really know exactly when they're going to end, so you want to be aware of that and be looking for the signals that that fifth wave is in progress. And what we have here is the potential for an ending diagonal fifth. So you've got this 1, 2, a 3, potentially a 4 we made recently, and now we're into the fifth of the fifth wave here. And I've got this laid out as not ending the bear market in an ABC correction, but as a bullish interpretation, a longer-term bullish interpretation, that the first wave of the major third wave may potentially be coming to an end with this ending diagonal pattern, which could make a slightly lower high or even a slightly higher high sometime this week. And then we would see a important correction pretty much on the same scale and duration as we saw in the same time frame last year, and 50% correction would take us back down here to about 1187 on the futures contract here, and that is one potential scenario. And this would reset, I think, psychology, turn things bearish psychologically, get a lot of cash, the too much cash, that is in the market right now, and raise cash levels in mutual funds. A lot of this stuff that is a little bit extreme in terms of psychology, in terms of liquidity, and reset a lot of that. So that is a very distinct possibility that I'm certainly putting on the agenda. And we're going to have to go into a whole nother 5-minute segment now to look at a variety of other scenarios on the S&P 500 and some of the other U.S. indices to understand what the other potential scenarios are.